Now speaking, Mark Roop, Vice President, Investor Relations. Kohls made forward-looking statements on this call subject to certain risks and uncertainties, as described in their most recent Form 10-K. Non-GAAP financial measures were referenced and can be found in the investor presentation filed as an exhibit to the company's Form 8-K. This call was recorded and replays are available, but not updated. Tom Kingsbury, CEO, and Jill Timm, CFO, were present. Now speaking, Tom Kingsbury, Chief Executive Officer. I'm pleased with our team's execution and the progress we have made. We are also committed to managing expenses with discipline and making strategic investments in areas that will drive long-term value. As a result, we have identified more than $400 million of cost savings over the next 5 years, which will be reinvested into our business to support our growth initiatives. This includes a disciplined approach to our operating expense base, as well as investments in our customer experience and digital capabilities. To summarize, our objective is to show incremental improvement as we move through 2023. We made progress against each of our key priorities for 2023 in the first quarter, and we remain confident in our ability to change the trajectory of our business as we move forward. Kohls achieved in-line results in Q1, with net sales decreasing 3.3% and comps down 4.3%. Sephora at Kohls continued to outperform expectations, driving a 150% total beauty sales increase year-over-year. Productivity gains were seen in stores, resulting in low single digits comp growth, driven by increased store traffic and higher units per transaction. The company affirmed full-year guidance and saw positive performance in certain apparel categories, such as dresses and activewear. Investments are being made to further expand the Sephora at Kohls footprint, reaching 900 stores by the end of 2023. Other merchandising initiatives underway include optimizing existing assortments, growing under-penetrated categories like gifting and home decor, consolidating checkout areas, and building depth in core and everyday essentials. Additional store openings are planned for the remainder of the year, and digital initiatives are being implemented to enhance the site experience and curate product assortment. Cost savings of $400 million over 5 years and strategic investments in customer experience and digital capabilities are planned. Kohls reported a 4% decrease in SG&A expenses and $164 million of bond maturities in Q1 of 2023. They have committed to a dividend which provides a healthy yield at the current share price. The company plans to increase sales productivity by enhancing inventory control processes, and their long-term objective is managing leverage to a 2.5 times level. Inventory clearance actions were also commenced in Q1 to create greater liquidity. Now speaking, Jill Timm, Chief Financial Officer. Kohls reported a 3.3% decrease in net sales, a low single-digit % increase in store sales, and a 19.6% decrease in digital sales in the first quarter of 2023. National brands outperformed private brands, with top performers including Nike, Haggar, Izod, Columbia, Hurley, and Eddie Bauer. Accessories was the best-performing line of business, while children's and men's apparel also outperformed the company average. Other revenue decreased 11% due to normalizing loss rates, and gross margin improved by 67 basis points. SG&A expenses decreased 4.2%, and net income for the quarter was $14 million with earnings per diluted share of 13 cents. Operating cash flow was a use of cash of $202 million, and capital expenditures were $94 million. Kohls affirmed its full-year financial outlook, expecting a 2% to 4% decrease in net sales, an operating margin of approximately 4%, and EPS between $2.10 and $2.70. For Q2, they expect gross margin to be down to last year and SG&A expenses to be up 3% to 4%. Guggenheim Partners analyst Bob Drbul inquired, "Have you seen results that give you confidence in the strategy you've laid out? What can you tell me about the sustainability of gross margins and the 4% operating margin target for the year?" Tom Kingsbury replied, "We are confident in our strategies, with Sephora performing particularly well. The activewear, men's and kids business had a rebound in Q1, while the home business is expected to start seeing traction in Q2. Women's apparel was disappointing in Q1, but there is potential for improvement through delivery of more product like dresses and polished casual. Our store performance has been strong, with the team demonstrating their ability to pivot and entertain new strategies." Jill Timm replied, "We feel confident in our margin outlook and have a 36 to 36.5% guide for the year, which is within our long-term framework outlined at our Investor Day. We will continue to drive value for customers through delayering offers and targeted pricing, taking clearance on a timely manner and abating commodity inflation. We will also moderate shrink headwinds with cost-cutting initiatives and anticipate deleverage in SG&A by 2 to 4%. We are confident in hitting our 4% target and building on it as we move into future years. Deutsche Bank analyst Gabriela Carbone inquired, have consumer spending patterns changed since the start of 2020? Tom Kingsbury replied, despite macroeconomic issues impacting middle-income customers, the company is confident they can continue to provide value and capture business. To remain successful, they must consistently give customers more value going forward. Deutsche Bank analyst Gabriela Carbone inquired, can you provide an overview of the performance of athletic apparel and footwear, including owned brands, and what drove the positive results? Jill Tim replied, in Q1, we saw positive comps in apparel and relative improvement in footwear. FLX and Tech Gear were top performers across the store. We managed to get our top 3 brands back to growth in some instances and moderated where they had fallen off in prior quarters. Robert W. Baird & Company analyst Mark Altschwager inquired, have sales in Q2 been in line with the down 2 to 4 annual guide, and what is driving the channel shift to e-commerce? What do you expect digital penetration to be in the medium term? Tom Kingsbury replied, we anticipate that the quarter will make up for the slightly lower than anticipated performance in May. June was one of our toughest months last year, however our strategies are evolving and we feel confident about the business. Jill Tim replied, we experienced positive comps from our stores and are expecting more momentum with the opening of 250-plus Sephora stores this June and July. We anticipate that our digital business will improve as we focus on pricing clarity, enhancing the site experience, curating product assortments better, and refining our strategies for marketplace and media network. We are confident in these strategies and expect to see progressive improvement throughout the year. Tom Kingsbury replied, we are fully committed to the digital business and have taken multiple proactive steps to ensure that improvements continue throughout the year. Robert W. Baird & Company analyst Mark Altschwager inquired, can you provide more information about the value simplification initiatives that are working and how they are impacting your gross margin? Tom Kingsbury replied, Kohls is simplifying their value message by eliminating layered events from the digital platform and general promotional discounts. They are introducing key value items at a lower price point during back-to-school season. This move is being tested carefully, and if it's successful, they will move forward with it. J.P. Morgan Chase & Company analyst Matt Boss inquired, have I been able to sustainably manage inventory receipts and drive newness across the assortment? Key learnings to date include initiatives put in place, progress made on inventory, and how those. Tom Kingsbury replied, we have managed to reduce inventory levels by 6% from January to now and project mid-single-digit decreases for the end of the second quarter. We have allocated resources to be proactive in monitoring inventory levels, ensuring we can chase open buy opportunities. This has been a great team effort with a lot of emphasis on processes and communication. J.P. Morgan Chase & Company analyst Matt Boss inquired, which traffic-driving initiatives are you most excited about, and how should the store fleet be managed in the future, given the improvements in inventory and productivity that have been achieved? Jill Tim replied, we are driving traffic through initiatives such as Sephora, where the initial 200 stores saw mid-teens comping and exceeded expectations. We are also moving registers out of stores to create more selling space and introducing home decor to the front of stores. Additionally, gifting items were successfully introduced for holidays like Valentine's Day and Mother's Day. In Q2 we will add 250 stores with Sephora and 45 small stores, and in Q3 all stores will have registers removed and home decor added to the front. All these changes have resulted in confidence for progressive improvement in top line. Tom Kingsbury replied, Kohls has been organizing stores by men's and women's sections for a long time, but recently they removed one of the register bays to create more room for gifting in the front of the store. This was done in the fourth quarter of 2019 and has been successful, with increased sales during Valentine's Day, Easter, and other holidays. Kohls also changed the graphics in stores, removing older ones and replacing them with more modern, cleaner, and brighter branding. All of this is part of their effort. Telsey Advisory Group analyst Dana Telsey inquired, have I made progress in reimagining the store for back-to-school, through promotions, value messaging and store design? What digital expenses have been accounted for in gross margin and how can these be adjusted going forward? Tom Kingsbury replied, 2 people will work together to transform stores. Good progress has been made and will continue into the second quarter. Stores will be prepared for back-to-school with presentations. Store looks will be rotated based on seasonality, currently featuring Americana for Memorial Day and July 4th. Team is executing well and getting behind plan. Tim replied, we expect digital to improve, with our margin benefits coming from less cost of shipping. We anticipate slight deleverage this year, between 2 to 4%. Our focus is on being more efficient while still investing in customer experience and having associates available to help. The cost of shipping was previously a headwind but is now right-sizing, and we are getting benefit back through cost of shipping. Gordon Haskett Research Advisors analyst Chuck Grom inquired, have the second quarter earnings been estimated to be in the range of a 2 to 4% decline relative to the full year, or will they remain similar to the first quarter's numbers? Tim replied, we expected sales to improve progressively throughout the year, and this was confirmed when February was our strongest month. However, May was slightly below expectations. We outlined several strategies to make up for that in Q2, such as Sephora and new product releases with the influence of Tom and a new chief merchant. We are confident that Q2 will be at the bottom end of the guide, but these strategies will help build it back up for the rest of the year. Gordon Haskett Research Advisors analyst Chuck Grom inquired, have customers responded positively to Tom's clearance strategy throughout the quarter, which is a new approach for stores? Tom Kingsbury replied, customers love clearance sales, which have been driving business since January and February. Timely markdowns have been critical to improving inventory turns, but the company was waiting too long to take them. Merchants need to change their approach and philosophy to better utilize existing tools for managing inventory. Tom Kingsbury replied, I have had processes in place for some time to ensure the inventory levels are monitored, delivery requirements are met, and I understand the benefits of having open to buy to chase. Citi analyst Paul Juez inquired, have there been any changes in the view of store numbers at the end of the first quarter? Did you observe any difference in dollars and units during this time, and what is the plan for the rest of the year? Tim replied, our inventory units decreased more than the dollars due to cost inflation in the first half of the year. This was despite opening new Sephora stores, which added more units. We expect that units and dollars will be more in line in the second half of the year as costs abate. Tom Kingsbury replied, we anticipate no changes in our store approach, as they are currently profitable. We are planning to open 7 stores in 2023, including 1 relocation. We are staying at this level for now, but investigate the possibility of doing more. Cohen and Company analyst Oliver Chen inquired, have Kohls traditionally struggled to balance merchandise margins and traffic? What risks are associated with driving women's and younger customer apparel? How would Tom rank the changes he is making in terms of their most impactful benefits, both short-term and long-term? Lastly, how will Kohls apply AI and data to their iconic Kohls Cash program and personalization? Tom Kingsbury replied, our priorities are to continue our relationship with Sephora, build a strong beauty business, grow the stores, 70% of our business, and digital business, grow the home business through wall art, pet, home decor, and gifting, and rebalance the active versus casual product mix. In Q1, digital performance was not what was wanted, but progress is being seen throughout the year. Jill will address gross margin. Tim replied, Kohls is focused on delivering value to customers through great product, gifting, home decor, pet products, outdoor items and women's with Sephora. Price will be simplified to avoid confusion, and Kohls Cash will drive traffic back into stores. This combination of initiatives is expected to hit margins and drive traffic to the store. Cohen and Company analyst Oliver Chen inquired, do you have the capability to manage and evolve the merchant organization with the new initiatives while maintaining a focus on inventory and speed and agility? Is the open-to-buy programming introducing a different skill set that your team needs to develop? How many direct reports are you managing? Tom Kingsbury replied, I have a good team of buyers in place and I'm confident in their ability to get the job done. Going forward, I plan to target more areas with more people. My focus is on teaching, training, and developing the current merchant organization. Overall, I feel very positive about where we stand today. Tom Kingsbury replied, I have concluded the call today with everyone's participation. Thank you for joining. Have